The backdrop to this research has been consistent, but it's also been changing. We started this research fielded in late 2021. It was the end of COVID, the start of the Ukraine war. With high inflation, interest rates, cost of borrowing, it was a difficult outlook. But still coming out of the benign environment of the 2010s and not sure where the next decade would go. Cut to 2026, and we were in field, just the Iran crisis was kicking off. Last year, we put it out just as Liberation Day and the tariffs happened. The backdrop has always been one of difficult circumstances, particularly in terms of pushing up borrowing costs via inflation and interest rates. So with that in mind, the key thing has been resiliency, because demand remains high for these assets.
I'm Tig Young, and this is the State Street Future State podcast. Each episode brings together expert perspectives on where the investment industry is heading and what that means in practice. We explore the trends, decisions, and operational shifts shaping how firms innovate, scale, and deliver value in a fast-changing market. I'm joined by my co-host, Anna Bernasek, Head of Insights at State Street. And with that, Anna, let's get started.
Thanks, Tig, and I'm very excited to introduce listeners to our guest today, James Redgrave. James is a key member of State Street's thought leadership team, and he's responsible for the firm's industry surveys. And for those who may not know, State Street conducts 3 global industry-wide surveys a year, and we share those findings with clients and the public.
That's right, Anna, and those surveys focus on private markets, digital finance, and data and AI. And today, James is coming in to give listeners an exclusive preview of the firm's 5th annual survey that's focused on private markets. So it's a really special episode for listeners. The findings of this survey are not due to be released until the end of June.
And we know, all of us out there, that there are a lot of developments in the alternative space. So there's really a lot to talk about. James, we're super happy to have you on Future State today. Welcome.
I'm super happy to be here. Thanks for having me.
So let's talk about 5 years of data. Why does that actually matter? And what does it let you see that one-off surveys simply can't?
Yeah, so we have a sort of consistent set of data questions, and then we have questions that change year on year. So, of course, having questions which are the same question about asset allocation intentions, for example, which we've been asking for the last 5 years, is interesting to see how people's attitudes towards different asset classes within the private markets change over the years. But arguably, and I think conversely, more interesting than the questions which stayed the same are the questions that change, because there's a chapter devoted to this in the paper. Actually, what we found was that we would do something like a deep dive into a particular topic, or we'd focus on a theme that would resonate with our clients or our audience. And then when we published it and took it out to the market, we'd find that would give us a kind of an impetus to go deeper into that subject the following year. So what you see is the kind of evolution of where we found people being interested in the private markets as we were talking about it.
James, give us a sense of, just a very quick sense of the survey itself, the design of it, before we dive into what you found. Who's included? How global is it? Why has this become one of the industry's most closely watched surveys on private markets?
Yeah, so it's a large survey. It's nearly 500 respondents, and it's kind of truly global. It's a combination of GPs and LPs, asset managers and asset owners, all the sort of markets that are particularly important to us at State Street, obviously North America, Europe, Asian markets, also important growth regions like the Middle East, for example, and Latin America. But I think the important distinguishing feature of this piece of research is it's not just the scope of the respondents, but it's the caliber of the executives that we speak to. Everyone we talk to is what we term a decision-making executive. So that's C-suite or heads of multi-asset or private markets or investment decisions, heads of region, people who are actually able to enact the types of change and operational strategy that they're talking about.
James, can you describe how the design or scope of the survey has changed over 5 years? And what does that evolution say about how private markets themselves are changing?
Well, first of all, primarily, I would say it's grown. We started with a survey of just under 200 respondents in a handful of markets. And now it's, as I say, truly global, nearly 500 respondents. So the scope has changed. But the questions we've asked have changed as well. We've moved away from a focus on a high-level macro outlook and investment intention perspective to more of a detailed operational one. And that's very much in response to how clients and readers have responded to the data in the survey that we've published in the past. We're still changing. For example, this year we've added a wealth management component to our respondents to really dig into this question of the democratization of private markets and the growth of the individual private markets investor.
Okay, so looking across all 5 years, what's the most consistent signal the data keeps sending about private markets? Really, no matter what cycle we're in.
Yeah, I think no matter the cycle or regardless of the cycle is definitely the way to think about it. So in many respects, the backdrop to this research has been consistent, but it's also been ever changing. We started this research in late 2021. It was the end of COVID, the start of the Ukraine war, high inflation, interest rates, cost of borrowing, creating a difficult outlook for leveraged investments. So cut to 2026, we were in the field just as the Iran crisis was kicking off. Last year, we put it out just as the Liberation Day and tariff announcements happened. The backdrop has always been one of difficult circumstances, particularly in terms of pushing up borrowing costs via inflation and interest rates. So with that in mind, the key thing has been resiliency, because whether people are, expecting more of a difficult future or, as they were in the past, maybe hoping for a better one, demand for these assets remains high.
James, I'd like to turn now to 2026 specifically. What's the biggest insight this year that would not have shown up in the early editions of the survey?
So, having asked a few questions about the growth of individual focused funds in the previous couple of surveys, we took a deeper dive into that this year. And obviously, we expected those particular question sets to mostly be of interest to asset managers and wealth managers, people who serve individual clients. But a really big majority, nearly 70% in fact, of purely institutional asset owners, mostly defined benefit pension funds and insurers, also plan to invest in fund structures designed for individuals, despite not offering individual fund selections as part of their models. And that came through, and I thought it was a really interesting point to us.
So the whole democratization, and you've touched on this in the conversation so far. I mean, it's really been building for years. Just based on this survey for this year, has it really crossed from concept to reality? I guess, and my other question is, where is the industry still struggling to catch up?
So, approximately a third of our respondents are currently either managing, distributing, or investing in funds aimed at individuals, and another half plans to do so, within the next sort of few years, or is putting plans in place to do so. So, I think it's definitely fair to say that it's a reality. More than 40% of respondents expect these types of vehicles to make up at least half of overall sort of market fundraising within the next 2 years. But our research also shows recognition of significant challenges, particularly around liquidity management and regulation for these types of products. Sort of moving from a scenario where you have a small number of institutional clients to a large number of retail ones has implications for KYC, AML, investor suitability assessment, etc.
When you think about democratization, does it surprise you what you're seeing in terms of the industry evolution? I just threw that in there. Sorry.
Yeah, absolutely. I think one thing that came through that was quite striking from this data is the types of vehicle people expect individuals to use to access these asset classes. And certainly over the medium to longer term, ETFs came through very strongly. Obviously, they're very liquid funds, very retail friendly, so you can understand the appeal there. But the sheer growth of that market as respondents perceived it caught us a little by surprise. I think, again, over the slightly longer term, tokenization came through and digital asset versions of private market funds. But I think one of the core distribution themes that we found was that people are looking to their own markets, certainly in North America and Europe, BDCs in America, LTIFs in Europe, and perhaps in the other regions, APAC, etc., people were more happy to follow the kind of regulatory leads of those two markets and invest in those fund structures.
James, looking back over 5 years, the focus seems to have shifted from why invest to how to operate. What pressures do you think have forced that shift, and why is it accelerating now?
So this is very much at the heart of what I was saying earlier about how the survey's developed and how the perspectives of our readers and our clients have helped us to develop it over the course of the 5 years. So when we publish this research, we take it out to the market, and the strong response we get is that people want much more detailed and granular sort of looks at how the making of their investment processes across front middle and back office, how to make them better. So in the past, for example, we've taken a look at how generative artificial intelligence has been used to convert unstructured information into structured data within investment processes. And this year we've gone very, very deep into, as I said before, this question of how to manage and distribute and invest in funds aimed at individuals, specifically with a view to liquidity management, compliance, regulation, distribution. Not sort of high-level challenge areas, but the specific pain points within how these institutions are looking to improve their operations for an individual investor base.
And James, digging into that how to operate, could you just give us a bit more detail on any of the trends that you've seen over the 5 years emerging?
So I think one very crucial perspective that we always take from this, and as a business we're very cognizant of, is that all of these operations really come down to data. It's about how you manage your data internally. It's about where you get your data from. It's about the repeatability and timeliness of your data, and the importance, especially in an individual environment or an individually distributed environment, of really making sure that you're getting that data on a frequent basis across a whole lot of different areas of performance, asset values, liquidity management. As I said before, data about who your investors are, data about the distribution channels are, what the distribution channels are. If you're moving from an institutional drawdown platform kind of model, it's really about the liquidity of information and making sure that you know more and know more quickly.
So, James, as we kind of near the end of our conversation, can you leave our listeners with just one key takeaway from this year's survey that we really haven't discussed yet in this conversation?
Yeah, absolutely. So, as it happens, I also run State Street's annual digital asset study, so I'm going to give that part of the market a little bit of a plug here. But a little over a third of our respondents said they thought that tokenized private market funds or assets would be one of the biggest 3 vehicle types in terms of flows for investor access to private markets within the next 3 years. Now, personally, I suspect that's a little optimistic, but it does go to show how serious the industry is about this democratization agenda and how technology is going to help to achieve it.
Thanks so much, James, for talking to us today. We have 5 years of surveying the market that provides amazing perspective, and today was just an early look at what that perspective reveals. Thanks to our listeners for listening, and we'll be back soon with more insights from State Street's 5th annual Private Market Survey.